Hey, John, thanks. Cleveland Fed President Loretta Mester, in a meeting with reporters, just reiterating her call that she sees rates going up above 4%. That is the Fed funds rate. It's something she has said, something she penciled in the June Summary of Economic Projections. It is interesting she holds to it now, even though the market has come down quite a bit in its own projections for where the Fed is going. The market has a peak funds rate at the moment, at least the futures market does, of 3.40. She did say a lot of data between now and September when she has to do it again, and she'll be looking at that and perhaps changing it, maybe front-loading it a little bit more. She went on to say that, again, she could alter that rate hike. And the Fed could pause, she says, in the second half of 2023 after raising rates up to a higher level. Finally, she said the U.S. is not in recession, but the risks are rising. John, back to you.
Steve, this is what the market is doing. S&P just climbed up a little higher on this. Is this fighting the Fed? Looks like fighting the Fed.
You know, the equity market has a mind of its own. It is interesting yesterday, John, that the bond market heard what Fed officials were saying, which is that this idea of rate cuts are not likely. But the equity market didn't hear that. As you know, yesterday was a powerful rally. Equity market seems to have a mind and maybe some fundamentals of its own that it's going through right now, John, in terms of the repricing that it had, in terms of the sell-off and maybe finding a little bit more value out there right now. But what we're not hearing, whatever the reason, it would not appear to be from the Fed and their rhetoric about giving up rate hikes next year. You remember we had Daly, you had Daly, we had Bullard, and other officials as well saying, Kashkari as well, saying definitively this idea of raising rates and then cutting them quickly is probably not the best forecast. But the equity market is doing its own thing here. Mester, the idea of a pause is a little bit different from a cut once you get up to 4%. The idea that you hit the 4% and you hang there for a bit is not necessarily what's priced into these markets, John.
So does this set up for a different kind of meeting in late August then, and how the Fed might be challenged to message?
Right. So I assume the meeting you're talking about is the one in Jackson Hole, which is, I think, setting up as a really interesting meeting. I think the Fed's going to want to think a lot about its course ahead, John. And then the meeting comes in September, where Mester would not sort of chime in on the 50 or 75. If you give me a second here, I'll see where the market is priced. I believe it was priced as a 50 most recently. Actually, you know what? It's kind of a 60% for a 50 and 42% for a 75. So there's a bit of a debate in the market right now, John, over that. Well, look, the main thing about this September meeting is there's two jobs reports, one of which comes tomorrow, and Mester and everybody else will be watching that closely. There's two CPI reports. One comes next week and one before the meeting in September. So there's a lot for the Fed to put into its models to figure out exactly where it wants to go with rates and whether it wants to project, John, this is the thing, any guidance at all. Really what we have is this meeting-to-meeting situation, and that's why I need to pop on here with every comment made by a Fed official.
Yeah, it's like parents where the kids don't listen. I know a little bit about that. Steve Liesman, thank you.